Well, not actually a whole lot to talk about today either in terms of all the details, because the Fed did an unusual move today, and as a result the markets did not totally settle out. The markets are normally volatile in the real meaning of the term, the traditional meaning of that term, coming out of a Fed meeting, more or less at least for the rest of the day. And because the Fed did something today that was quite unusual, the markets pretty much were like that way through the end of the day, so it's not really easy to tell yet exactly which direction things are going to go. But I will provide a brief explanation of things in terms of the context of what is going on. I did note in a previous update that it had gotten to the point where some pundits were saying for a few days already that with the way things were in the meantime in the world and the marketplace, that it might be necessary to do a 0.75 point rate increase, even though the Fed had been projecting a half a point rate increase, a 0.5% rate increase. And it turns out the Fed decided to do a 0.75 point rate increase. Okay? In that sense, going along with what the market was expecting in the meantime, which the Fed, generally speaking, in modern times does to begin with. So given that the Fed decided to do that, I decided to listen to the Fed news conference this time to find out exactly what the reasoning was. And I learned even more than I thought it would. The Fed, at least in effect, bearing in mind it's the Fed chairman talking at these news conferences, but the Fed chairman is representing the Fed at those news conferences, so I will continue to say the Fed said, even though it was the Fed chairman said, because I don't want to have to keep saying that all the time. At any rate, the Fed said some things at the news conference today that I found were very interesting admissions. They were very accurate transmissions, very correct transmissions, admissions, I mean to say admissions, okay, but transmissions as well for that matter, transmissions as well, because they were transmitting this information to the world, okay, but I was still a bit surprised to see them be that open and honest about it in the big picture. Not about a couple of things, they talked around those subjects, but in terms of what they did admit to, I found it interesting that they were willing to admit to those things in the context of what is going on right now. Okay, so let's get a bit more specific. Okay, they did say that in the end, based on the most recent incoming data, they decided a 0.75% rate increase was called for and necessary. In that sense, they did in the end what the marketplace expected them to do. But they did also say that it got to a point where they deemed that necessary at the last minute, in the big picture. Okay, in other words, they were in effect and even openly admitting that the assessment of the marketplace about what was going on was correct in the meantime. That is bad news. They didn't, of course, put it directly in exactly that way in either the press release or the news conference, but what they did say in the news conference afterwards to explain the situation was very telling. I will note that they did say more or less the same things over and over and over and over again, because they were, the news conferences, it's called a news conference because it is one, okay? All they're doing is responding to reporters' questions, and there are a lot of reporters there, okay? Many of the reporters asked similar questions over the course of time, so, many of the responses are similar or the same. So they kept saying more or less the same things over and over and over and over again. The gist of it is, boiling it all down, that the Fed's primary job in terms of what it can actually do, correct statement by the way, is that they can try to modify demand to bring it in more in line with supply. Okay? Usually the problem is too much supply and not enough demand. This time the problem is the other way around. There's too much demand and not enough supply, in part because of all the supply restrictions that have happened because of external forces in recent times that pretty much everyone knows about in the meantime already anyway. I won't go into those in detail. You know, the Fed chairman did detail them. The point is they are aware of them, not exactly a surprise there. But as he pointed out, the Fed's main job, main capability, is to modify demand to be in line with supply. And he flat out said there's an excess demand over supply right now for multiple different reasons, including supply shortage. So the only thing they really, and the only tool they really have either just on an ongoing basis is the Fed funds rate, the interest rate that they control. Okay, QE is an unusual measure. They have been doing it relentlessly for years in the meantime, continuously, but that does not change the fact that it is an unusual measure. They're trying to get back to normal. They said that themselves. My claim is that that's going to be impossible. They can't get there. Okay, that's ultimately the gist of this message and even the gist of this channel. Okay, but to get from where we are to there, explain a couple more things and put what he said in the rest of what he said in context. Okay, the bottom line is that their main way of trying to bring demand in line with supply is to raise or lower the interest rate. Now, for a good long time here during the big illness, they had a lack of demand problem. Okay, but now things have completely flipped in the other direction and they now have a too much demand problem, both because demand went up and because supply went down. Okay, and so now they decided in the end they needed to do a 0.75% rate increase and possibly another one soon. They did say that to help drive demand back in line with supply sooner rather than later. Okay, they did say they're trying to front load interest rates. They did say they might have to anticipate somewhat higher unemployment in the context near term. In other words, they're effectively saying they can no longer fully do full employment at low inflation for the time being. And they also said part of the problem that they're dealing with is that several of the influences that are going on out there currently, they have no control over. Those are things that are beyond their ability and beyond their purview. Okay? What they basically said, those sorts of things were temporary factors in the past, in the distant past. For a long time they didn't have to worry about it at all. In recent times they have come up again. They did not see them coming. Their words, not mine. Okay? And the fact that those things are going on now is greatly complicating their job and their decision making. Again, their words, not mine. Although I'm quite sure that is the case. I saw that coming. Okay? So they're saying, they basically said they're going to do everything they can to get things back to normal. They think they can do it. They're determined to do it. They're pretty confident they can do it. They feel they can do it. They just didn't make a promise that they could do it. But they did also say that if the stuff that's going on right now doesn't prove to be so temporary, that's going to make their job a whole lot more difficult. No kidding. Anyway, bottom line of all of that is that I did see it coming in general, just didn't know exactly when it would hit. Okay, it was completely inevitable that these sorts of imbalances would eventually develop. Okay, that is why, in the long run, full employment at low inflation ultimately, eventually becomes a contradiction in terms. But they're determined to try to get back there anyway, in part because, as I said, we are required by law to try to get there. Okay? The ultimate bottom line is that I think things will continue to get worse, and both the marketplace and the stock market will react accordingly. Okay? And, on the other hand, because the Fed chairman did say, we're confident we can do it, we think we can do it, we're certainly going to put our best effort into doing it, etc., etc., the Wall Street traders, who are ultimate over-optimists by nature, said, hoorah! He says he can do it, therefore we assume he will. And up the stock market went, at least for the time being, despite a 0.7 point 0.75 point rate increase, thereby confirming everyone's worst fears about what is actually going on out there. Now the thing is, it shot way up, it started coming back down solidly before the end of the day, but the day ended before it could go back down enough to be conclusive about anything. So we will see what tomorrow and early next week bring, okay? But the bottom line is, as I said, I think it was yesterday in the update, at best it'll be a slight upward reaction for the time being, which did end up happening today, because again, in a law against recessions environment, the job of the Fed chairman in the press conference after the Fed meeting is to talk as schmaltzily as possible, pretty much no matter what, in order to try to keep confidence going, especially among the Wall Street traders. They're not stupid. If they would come out and say, oh, it looks bad and really can't do it, the stock market would go into crash mode instantly, right then and there. They aren't going to do that, okay? So I saw it coming that it might temporarily bounce up, that definitely not an uncommon occurrence in the past. But as time goes on and reality hits more and more, I think the Wall Street traders will react accordingly, because it'll get worse and worse and worse for the economy as a whole. In other words, those things that the Fed today readily admitted that they have no control over, and that are already getting in their way, and everybody else's way for that matter too. In other words, getting in the way in general, is what I was just going to say. And will probably continue to get worse, therefore getting in their way even more down the road, are not going away. In fact, they will probably do that, get in the way more down the road. So that's the reason for this channel. That's why I'm doing it, to point things out about what is really going on and where it is really headed. Basically, ultimately, the Fed is going to lose control. To some extent it already has, and they more or less admitted as much today in the news conference without using those exact words, because that would not go well at all, even near term, but rather stating what all is going on out there that they quote-unquote don't have any control over, which means they are losing control. That's precisely the point. They just didn't say it that way in order to not spook people right away, because they're hoping it'll turn around, so as they put it, our job will get easier down the road. My claim is that will not happen. That's not where things are at in the big picture. But as the Fed itself said today too already, the Fed chairman, we monitor the economy on a week by 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 week basis, and then look it over every 6 weeks. And no, we didn't see the recent stuff coming. Well, if your focus is on things on a very near term, week by 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 week basis, of course you're not going to see it coming, because you don't have the actual big picture in the picture at all. I've known this for a long time. That's why I knew they wouldn't see it coming. They would be caught totally by surprise by it all when it comes, and they basically just admitted that that's exactly what happened. They got caught totally by surprise and let things get out of control. And as they basically said today, we now have to do whatever we can to try to get inflation back under control again without killing the economy in the process, to which I say, good luck. They're basically, we'll accept slightly higher unemployment. We're factoring that in. But the point is that hopefully we won't have unemployment go high enough that we'll actually have a recession. Okay? Oh, no, we're not trying to cause a recession. He flat out said that in response to one question toward the end, as they zeroed in more on the issues, as the reporter zeroed in more on the issues. But the point is that if they're going to do enough to really kill inflation, they pretty much have no choice. And on top of that, I practically guarantee that once the national debt goes exponential, which is also something they by definition, both at a practical level and legally, do not have any control over, they're going to find themselves in a downturn in no uncertain terms, probably exacerbated by all the other stuff that is going on. Although I've thought all along, and I still think is a distinct possibility, that the other stuff will happen first, knocking things down first, which will, by the way, accelerate the national debt exponential, which will cause it to happen even faster than it already is, which will then be that way around, that that other stuff will happen first, and then the national debt exponential will exacerbate the situation rather than the other way around. But we will see in that regard exactly what happens. It will all ultimately be playing together. That's for sure, in my opinion. We'll see exactly how we get there, and how long it'll take to get there. It won't be really long anymore, I don't think, which is precisely why I'm doing these videos. Anyway, we'll see what happens tomorrow and Friday. Bearing in mind again it's Friday, so things can happen there that are based on Friday. We'll see how successful Friday is, and then also early next week, and go from there.